Good morning and welcome to ForexTV.com's AM Forex New York. Today is Friday, December 4th. I'm Caitlin Sisney. After 3 days of losses, the dollar advanced against the euro on speculation a U.S. employment report may add to evidence the world's biggest economy will skirt a recession. The Labor Department is expected to say today that employers have added roughly 20,000 jobs. Yesterday, it was reported that U.S. factory orders rose more than forecast in November, and companies hired workers at a faster than expected pace last month. Euro is currently trading at 147.12. The greenback headed for its biggest 5-day decline in almost 2 months against the yen as investors bet the Federal Reserve will cut its benchmark interest rate by as much as half a point this month from 4.25%. Yen is trading at 109.36. Sterling dollar rallied by nearly a cent to test 198 offers after the disclosure of December's much better than expected UK service sector PMI. This unexpectedly rose to 52.4 from 51.9 in November. Sterling is trading at 197.47. Today we're joined by Joseph Francomano from Erste Bank. Joe, can you tell us your expectations for the day, and specifically what do you expect to see from today's employment numbers?
Good morning, this is Joe Francomano from Erste Bank. After a very, very volatile start to the beginning of the year with Tuesday's complete dismantling of the yen, basically setting the tone, today we have the U.S. unemployment report following yesterday's ADP number, which came in about as expected, but on the obviously much weaker than the previous months. The market is looking for a confirmation that the U.S. economy is weakening, and looking actually at the third leg of it. The first leg being inflation, the second leg being growth, and the final leg being the employment matter. It's pretty much a given. I'm not really sure right now what the futures are pricing in for the cut, but it's almost universally accepted that the Fed will be cutting rates again come January 30th. Today's number basically is looking for the employment leg to confirm that parcel. With that said, we have the euro having rallied from 144 to 147 from the end of last week to the beginning of this week. We've seen dollar yen go from about 113 down to as low as 108.5 or so. With all that said, I do believe that the risk to this number is to be dollar positive, although I do think that the number will be weak, that it will be dollar negative, but that's been all priced in. So the risk is that the number is stronger than expected, that you get a surprise pop, and which could lead to a short rally. Right now, dollar yen technically 109.75 has been a very strong top over the last 2.5 days or so. We've had multiple attempts at breaking through, and all have failed. I would not be surprised if the number was, like I said, stronger than expected and provides a dollar rally. You could see the dollar yen gap very strongly through the 109.75 level and as far up to 111 at this point. Euro dollar, on the other hand, we had a false breakout yesterday through some pretty good resistance at 147.50. We made a high of 147.82, subsequently falling back basically because of a heavy euro yen. Right now, I've got a very strong technical support at the 146.85 level. I would look to see, I think if we do break below 146.85, you might see a little bit of a correction, but I do think, all in all, people might be looking to buy euro dips over the next couple of days or so. I would not be surprised to see a false move below 146.85, perhaps to as low as like 146.65 or so, like that. But I do believe that smart money may be looking to come in and buy these dips today. All in all, again, we're all waiting for the number. It's been a relatively quiet overnight after a volatile previous 2 sessions, but I do expect some fireworks again today. Thank you.
Thank you, Joseph. That's all for your AM Forex New York. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.